All right, we're live. Hey, thanks for joining me. Oh man, it's like almost 5:30. I think the show's getting a little bit too late. I've got to really get back to 4:30. Whatever. I'm doing the show now. Thank you for joining me. Couple of points to make today. Some big news over the weekend, which really didn't turn out to be that big of a deal. It's not no death now. You're watching Be the Boss of Your Money. It's all about you being the boss. It's not just another market recap or a news show. It's a perspective show. Okay. It's all about putting perspective into your financial decisions. We talk about a lot of things from credit card debt, your credit card, your credit score, borrowing money, mortgages, auto loans, investing, financial planning, estate planning, tax planning, as far as what I do with regard to staying in my lane for my job, like IRAs, things like that, and tax loss harvesting. And we bring in lots of guests. I love having guests. So I'll have a few more people to bring in. But the big news today is Moody's, one of the three major credit rating agencies, they are the ones who issue their opinion on bonds, or one of the three big companies that says they're AAA rated or AA rated or B rated or what have you. Moody's. It's really Standard and Poor's and Moody's are the two big ones. And then there's like Fitch is a much smaller player. But Moody's and S&P are really the they're really the ball of wax. And Moody's came out on Friday after the market closed, after the Dow was up almost 400 points. NASDAQ that day on Friday was up over 2%. S&P was up over 1%. It was up over 1.5%. It was up over 1.5%. It was a pretty good day and a pretty good week, as it turns out, for last week. We've been on quite a tear since the fourth week of October. Seasonally, November is a pretty good month. We broke above a lot of negative technical damage in the major averages in the charts. Earnings, for the most part, have been better than expected. By far, over 80% of companies reported better than expected earnings, albeit they were lowered expectations were lowered going into the earnings season. But at least companies were able to jump over that hurdle. Interest rates look like they peaked on a near-term basis anyway, with the 10-year Treasury hitting a little over 5% and backing down to like 4.6 where it is now. And you put all this together, slowing retail sales, it looks like the economy is moderating. About 2 weeks ago, we had the, what do you call it? A week and a half ago, we had the non-farm payrolls, and jobs were created, but to a lower extent than expected, which says that the Fed could be moderating their stance. And before you know it, the soft landing scenario is very in vogue, and that means that the economy could slow down enough to bring inflation down, but without having the economy go into an all-out recession. And then we could have lower interest rates, lower inflation, not a recession, decent earnings. And when inflation is lower and interest rates are lower, it's just an easier hurdle for stocks to jump over, and investors start taking more risk. And all of a sudden, the stock market goes up, which is basically describes the last couple of weeks. Could it continue? Yeah, it could continue. There's always somebody who's going to say, oh, we're not out of the woods yet. There's more damage. There's this, there's that, consumers, credit cards. Listen, we are never completely out of the woods. There's just a psychological view over the short term of where we are in any given cycle. Longer term, companies grow, they grow their revenues, they grow their earnings, the good ones anyway. We get new mega cap companies that come out that help lift the market, and then we get creative destruction, and then we do the whole thing again. This is the cycle we're in. It's not going to end. There's always another negative Nelly around the corner. We're going to run into this problem. We're going to run into that problem. We're not out of the woods. I've said this many times. I hate that expression, but we're not out of the woods yet. This is like an analyst on TV saying, oh, we can have this, we can have that. Things are going well, but we're not out of the woods yet. What does that mean? We're not out of the woods yet. You mean there's still things that could go wrong? We're talking about investments. We're talking about the stock market, the economy, the geopolitical world at large. There's always something that can go wrong. We're not out of the woods yet. It's like Captain Obvious. When I hear people say we're not out, but when I hear people say, but we're not out of the woods yet, I want to give that person a dunce cap. Yeah. Let me run the quick intro. Is it an intro? Almost 6 minutes, almost 6 minutes into the show, but it's important. We're going to talk about why the market didn't go down today, and a little bit about geopolitics. Okay, here we go. So Moody's puts U.S. debt on a negative watch. They didn't downgrade the debt. They said that they could downgrade the U.S. debt. Let me turn the gain down on the mic. It's a little hot. They could downgrade U.S. debt. They could. Will they? We'll see. Part of the downgrade is the rancor in Congress. Congress can't agree on a new debt ceiling, a new budget plan. They can't agree on squat. You have a very slim majority in the House of Republicans over Democrats. And within any party, both Democrats and Republicans, there are hard elements to the right or to the left. And it's hard to get a party to agree on anything. The Republicans are not some homogenous product, and neither are the Democrats. I wonder if the Democrats had a slim majority like the Republicans do now, if they would agree on policies that were not so liberal. Then you might have a few people there defect and say, I'm voting against this, voting against that. But really, that's the way it's supposed to be. We're supposed to have Congress members meet in the middle, a compromise. We actually did that for the budget when McCarthy was Speaker of the House, and he was voted out. The whole thing is a shame. The whole thing is blowing up in everybody's face because now nobody's getting anything done, and it's all about political advantage, not about helping the country. And we have James in there. James, thanks so much for taking the time. Crypto has been interesting lately. Well, that could have something to do with the fact that crypto has been up a lot lately. Always interesting, and I find it fascinating, James. I appreciate you taking the time to look. I've been talking about crypto for years. I mean, I've been talking about crypto for about 7-8 years now on social media. I still don't fully understand it. I've written articles about it on CNBC. I could explain it, but what gives it flight, I'm still not sure. It's just when it starts to go up, other people start to see it go up, so they want in on the action, and it becomes more of a feeding frenzy than anything else. And I realize all assets, anything from stocks to bonds, commodities, short-term become a feeding frenzy, then they get cold and they go up and down, and it's more buyers and sellers. It's, stocks, crypto, whatever it is, it's more like a commodity. When there's more buyers and more sellers, that moves the direction of the underlying asset. But I do think over the long term, you've got to have something underneath the asset in terms of cash generation or earnings or something. I don't see it with crypto. And there's so many cryptos out, most worthless, even the ones that people are trading, I think it's fair to say will become worthless. I'm not naming specific ones. So be careful, have fun, realize that this is your gambling money. And if it works, If it works, great. You can give me a call or comment how much money you made in crypto, and I will be very happy for you. I'm not going to be in it. It's just not something that's for me. It's not a bullish or bearish bet. It's just, I don't think it's for me. And I still don't understand the mechanism. I know what it takes to be a currency with the US dollar. I know all the things that go into having a currency. So that's why I don't get into that. And James comes back here and he says, don't play with money. You can't stand to lose. Damn right, man. That's it. That is exactly it. And thank you very much. And I think that is also logical and mature. And I'm right there with you, man. Thank you. I agree 100%. So Moody's has a negative outlook for the U.S. debt rating, and it was just a nod of it. I said I have a radio show in the morning. I said the radio show. I don't think this is going to be a big deal at all. I mean, the fact that the S&P and the Nasdaq were off a little bit today, just as a reflection of a big rally in the last couple of weeks, and the Dow was still up today. So let's take a look at how the major averages did today. All right, so the Dow is up 54. Again, it was up 391 points on Friday. Nasdaq was off 30, off 0.22%, but it was up over 2% on Friday. S&P off, barely off. I mean, 0.08%, big deal. Gold was up a little. Oil, a little bit of a up day, but still, oil's tanked in the last couple of weeks. And the VIX, which is right now 14.76, was above 15. It was up about 8% earlier in the day, but only up 4% by the end of the day. By the way, the VIX going up or down 4% in a day. That is not unusual. The VIX typically has 4 or 5% swings on a daily basis. It's not like, you have the New York stock market, if the S&P or the Dow Jones is up 4 or 5% in a day, you'd really feel that. But the VIX, this is just normal for the VIX, okay? 4% up or down move. By the way, you can't invest directly into an index, but you know what you can invest in? The security that tracks or mimics an index. Yeah, I bet you've heard that a couple of times. All right. I'd like to thank the sponsor of the show, the disclaimer that we just said. Thank you very much, disclaimer. And let's take a look at the bond market. Bonds were basically a non-event today. The 10-year up 0.01, big deal. That's barely anything. And yeah, bonds barely move. So this whole thing, which people are going to make a lot of fear-based selling on this negative outlook, it's not that big of a deal. Now, before someone says, but isn't too much debt a big thing in the economy? And I'm not debating that. We've got to do something. But to make it look like this is a near-term imminent thing and you should make your financial decisions and your investments and sell this and buy that and make all kinds of crazy moves with your money because of the news out from Friday about Moody's putting on negative watch U.S. credit, U.S. bonds, I wouldn't change a thing. If anything, as John Bogle, founder of Vanguard, once said, T-bill and chill. That's what he says. And I like, if you own T-bills, I wouldn't start selling treasury bonds or T-bills because of this news out today. They basically said they see no risk of a debt default by the United States. It just means that as time goes on, if interest rates keep going up, more and more of the United States tax revenues will be going toward paying interest on our national debt. Now, we have revenues coming in through taxes. And when we don't have enough revenue coming in through taxes, we have to borrow the money. Now, here's a strange thing. I think it's pretty strange. Just hear me out. We have at the end of 2025, so say when the calendar turns January 1st, 2026, the Tax Cuts and Job Acts sunsets. We got a 10-year break on taxes where tax brackets were lowered, thresholds were lowered. Basically, if you make a ton of money, you got a pretty good sized tax break because of the Tax Cuts and Jobs Act. It was President Trump's singular achievement. But it was agreed upon that was a 10-year deal. It cost about $2 trillion of missed revenue for the United States. That's going to sunset. Now, I haven't, correct me if I'm wrong, but I've only been, we've only had Republican debates. Is anyone talking about what they plan to do with that in 2026? Because whoever wins the next presidential election, that's going to fall on their lap. So depending on where you stand politically, that's either when it sunsets, people are going to paint that as a giant tax hike, biggest tax hike in history, or they're going to say, no, it was the biggest tax cut in history, and we actually agree that it'd be 10 years and it's over. So why are you making such a big deal about it? You knew this was coming. So, when you have a deal, it's a deal. But for some people, if the economy is good, don't let that expire because times are good. Let's keep it going. If times are bad, don't let it expire. Well, because you wouldn't want to have a tax hike when times are bad. People are going to come up with all kinds of ways to twist this, but I haven't really seen much in terms of anyone saying they would let this go on. And the reason is because of the budget deficit. This won't plug the hole completely in the budget deficit, but it'll certainly help a lot, right? So we shall see. And we talk about alternative energy a lot, and that's always a big topic. Okay, but I want to show you a stock called Plug Power. Do you remember this? They make, I think what they do is a hydrogen battery, right? And Plug Power was supposed to be this incredible solution that was going to help alternative energy vehicles. And every now and then, the Plug Power, they make these batteries. They're going to get some kind of deal or contract from an OEM, an original equipment manufacturer, like a GM or a Mercedes or Volkswagen, and they're just gonna take over the world. In the meantime, they issued a going concern letter last week. You know what that is? That's when their accountants come out and say, we question this company's ability to be a going concern. And it basically means there's a very high likelihood that the company's going to go belly up. But let's take a look at all this stock at one time in the year 2000 was over $800 a share. And all the way down, there was reason to buy it. And every time the stock started to go back up, went up to 4.5, 5, reason to buy it. Stock went up again to 25 during the pandemic, went as high as the 30s, almost $40 a share. People are thinking, well, it was 850 once. It's going to come back, even if it only goes to 100. And here it is, under $3.5, and it's questionable as a going concern. When you buy a company that, I'm not going to say it's a no-name because people have heard of it because it's been a publicly traded company for a while, and it's had its moments in the news and the stock would spike or something or some news on it. But this is why, for individual investors out there who go into individual stocks, be careful. It's one thing to be down 50% on a Disney, which Disney went down about 50% from peak to trough in the last few years. It's one thing to be down on a 3M. It's one thing to be down on a U.S. Bancorp. Because we have confidence that those companies with time could recover. We have confidence that those aren't going to zero. But when you get into something like a Plug Power, it's basically a no-name stock, you don't get that. You just get like promise, constant dog and pony show. And this is why a branch manager of mine many, many years ago, when my career was knee-high to a grasshopper, said, Mitch, whenever you get into an individual stock for a client, make sure the spouse has heard the name. He actually said wife because that was a different day and age, but now I would say spouse. Make sure both people have heard the name, because if they haven't heard the name and they're down in it, they're not going to be happy. They're down in Nike or something. All right, it's Nike. I could wait. It's not the end of the world. All right. And then we go on to some other alternative energy stuff like the ETF that tracks lithium. Remember this? LIT. Okay, LIT is the ETF that tracks lithium producers. You could see that chart, how poorly it's done. You could see that it's down over 18% year to date, lost about a third of its value in the last year. And the stock is in the 40s, okay, 47. But at one point, this was 80. And there would be no end, there would be no end to the price of lithium because of batteries. But you know what? Every time there's a popular commodity, we always find more. And we're finding now some pretty huge deposits in the western part of the United States. It's going to take a decade to develop these into useful mines, but they're there and they will be developed. Eventually, batteries are going to get smaller, which they are, and batteries will be able to use less lithium for the same power. And that's what happens. And then while we're on alternative energy, let's take a look at Chevron, which incidentally, Chevron hit a year low last week. So you think like, oh, from 189 to 141 is the range. It's 144, so barely off its low. All right. It's like a stock from $14.11 to $14.40. Not really a huge bump. And it just goes to show you that if it's a matter of, fossil fuel energy stocks, traditional energy stocks, or alternative energy stocks, I don't think it matters. I think you might as well buy the fossil fuel one because when one goes up, they both go up. They're correlated. So when you hear oil up a lot, wow, we better get into alternative energy. Well, if oil goes down, alternative energy goes back down with it. So they're correlated. So you know what? I don't really, you're taking more risk for companies with no earnings and no path to profitability as opposed to being in an old-fashioned fossil fuel stock, regardless of how they move based on the price of oil. I don't think anytime soon a Chevron goes to zero, but a Plug Power is a going concern. You see that? You see how that works with individual stocks? And while we're at it, last thing we'll check. So why was the Dow up today? And that's because of this. Boeing up 4%, up almost $8 a share today. Boeing got like a $56 billion order from, I don't know if it was United Arab Emirates or Qatar. What are the major, biggest airlines for like 90 777X jets? It's a massive order and just reintroduces Boeing as a powerhouse company. And it reminds people who want to sell the stock or short the stock, it reminds them that it's still a powerhouse company. And companies are still buying airlines and more fuel-efficient airliners. And it's really just like a remarkable piece of news. In the last year or so, Boeing has gotten some huge, huge orders. And, it's just a wonder why the stock isn't up yet. But nonetheless, that is what moved the stock today. But this is not recommendations or advice. I'm just letting you know why the Dow wasn't down. I hope I'm not skating too thin on ice with that, right? So Boeing was up, and Walt Disney continued to move. It's on its ascent higher after finally coming out with improved fundamentals. So this is what's moving the market today. And overall, the Moody's debt, the Moody's negative watch on the U.S. debt, not that big of a deal. I think a bigger event will be Saturday when we have the expiration of the budget. We have government shutdowns, possibly Saturday. I don't see how Congress pulls a rabbit out of the hat now. It's already Monday. And although Congress had a while to deal with this since the last time we had an agreement, which is what caused McCarthy to lose his job as Speaker of the House, since then, with all the going on and trying to figure out who the Republicans would pick for the Speaker of the House, they really haven't had time to do anything. And the proposals that they're coming up with are DOA. And it's it's more of the same. But I don't think it's going to be a huge deal if the US government has a shutdown. I don't think nearly that many people as a summer go to national parks, which would be closed, and essential workers like people work at airports and the military still have to go to work. They'll all be paid back once the government gets back to business. Anyone who lost back pay because of the government shutdown, who's a government employee, will get their back pay. All right. That's the story. Hopefully, we have something not too exciting tomorrow. I kind of like it boring. All right. Have a great night, everybody. And thanks so much for watching.